welcome back to the Macro Gamer channel. My name is Mark Cassingham. Today we're going to go over week 17 of our weekly numbers. It's going to be our portfolio's performance as of November 16th, 2024. So let's go into our numbers. So our current portfolio's net worth is $257.79. Again, that's of today, November 16th. We have our weekly data, which we are down for the week. And we'll go over that with our charts, but gold's a big contributor to that for the first time this year. So we are down 0.57%. You see in the lower right here, that's our money weighted return, 0.57% we're down for a market loss of $1.33. And this is from November 11th to November 16th. So this is 1 week's worth of data. We've had a sharp drop post-election. Gold has done a complete reversal after being in a bull market from October 2023 till pretty much this election. It's starting to reverse a little bit. Don't know if that's the new trend, but at the very least it's turned around. Our monthly data, which is from October 16th to November 16th, we're up 0.8% in our portfolio. We have a net cash flow of about $30. You see right here, 29.51. That's on October 6th. That's when we deposited $30 cash. Every 3 weeks, $30 goes into the account. We have our market gain of $1.34 and a dividend of 13 cents. So still positive for the month. Not good on the week, but positive for the month, just barely. Then we have our quarterly data. So this is a 3-month return from August 16th to November 16th. So we're up 4.78% over a 3-month period. We have a net cash flow of $120, so that's 4 times that we put in $30. So you see the steps in this chart. Every time there's a step like that, that's a $30 deposit going into the account. So that's cash into the account. And then it gets allocated to our different assets. We have a market gain of $6.97 and dividend earned of 81 cents. So 4.78. So this is our lowest quarterly return, I believe, so far. Again, gold doing that reversal on us. Now you're going to see it. So this is our portfolio weekly percentages for week 17. You can see our allocations. Gold currently still at 30%, which might change depending on how this reversal and trend goes. Government bonds, 20%. With GOVT ETF, gold GLD ETF. Our dollar ETF, 15%. UUP ETF. Our commodities ETF at 15%, which is USCI. Our stock ETF, RSP, which is at 15%. And our Bitcoin ETF, which is doing phenomenal, which is the IBIT ETF. So 5% for that. So those are current percentages. They might change. We'll see. Currently for the week, for a 1-week return, gold has dropped 4.59%. for a market loss of $3.59. This is what I'm talking about. So remember, 30%, the largest allocation, right? We've had a strong year, over a year for gold, and it's turning on us. And this is all really just post-election has happened. If you look at when we look at the chart, you'll see like it's obvious that it happened right around the election time. So people are selling gold, which is probably ironic because like Trump's like gold everything, but then they're selling gold. I think that's kind of funny. Government bonds down 0.65% for a market loss of 34 cents. US dollar up $1.89 or 1.89% for a gain of 73 cents. And the dollar has been coming up, a strong reversal, which is also interesting. Commodities down 0.26% for a market gain of a market loss of 10 cents. Stocks down 1.69% for a market loss of 66 cents. Bitcoin up 19.33%, almost 20% in 1 week for a market gain of $2.48. So quite the reversal, Bitcoin. Trump apparently is also the Bitcoin president. He's Bitcoin daddy now because, man, that shit, like a rocket ship, just shot up after the election. It's crazy how politics influence markets, but it's very true. So for our monthly return, gold down 4.21% for a market loss of $2.99. So you kind of see that drops very recent over the monthly period. Compared to the weekly, it's roughly the same because it's just this last week it's really come down. Government bonds down 1.77% for market loss of 88 cents. I really gotta think about trimming this down more. And then I'm looking at gold too. I'm like, what the fuck? US dollar up 3.95% for a market gain of $1.40. This might be a good transition. USCI up 0.87% for a market gain of 31 cents. Stocks up down 0.03% for market loss of 0.01 cent, so 1 penny. And Bitcoin up 36.33% for a market gain of $4.08. So Bitcoin just having a hell of a run. And over a 3-month period, gold is actually positive, up 1.57% for a market gain of 85 cents. As I said, it's more recently coming down. Government bonds down 2.3% for a market loss of $1.10. Dollar phenomenally up 6.18% for a market gain of $1.79. Commodities up 3.56% for a market gain of 84 cents. Stocks up 4.25% for a market gain of 93 cents. And Bitcoin up 61.21% for a market gain of $5.40. Bitcoin's fucking ripping. Crazy. All right, so no transactions this week. Maybe next week, we'll see. Like I said, it's difficult to pick the assets that I want to go into just because it's a volatile time right now specifically. Like I said, post-election, I showed this last week on the charts. I'll go over it again, but you can see the obvious spikes up and down, like right after the election happened. So people are still, they're voting with their opinions, like not really with the market. Market's kind of it's crazy right now. But anyway, so our Illuvium staking, we are at $42.28. So we're up on the Illuvium price right now. We have still 4.23 ILV staked for current market value of $178.20. We received 2 payments so far, which equaled 0.012 ILV for a current market value of 51 cents. We currently have no revenue distribution. These are our vesting schedules. So we have 4 different vests. We started one on July 27th, one on August 24th, one on September 25th, one on October 25th. And if I keeping in line with this trend, probably in 1 to 2 weeks, I'll have one for November, and we'll add in another one. So every month, $40 cash, just buy ILV at current market price and stake it into the protocol for potential future revenue distribution, right? So speaking of revenue distribution, this week we got 0, so nothing to claim. And that is it for our weekly numbers. So now let's do what I've been talking about. So this is gold on this chart. And you could clearly see at the end here, there's a large drop in the price. Funny how it comes right around to this green line though. I wonder if it's going to kind of just play around this line, if it's going to keep cutting through it. But this is exactly what I'm talking about. Just gold coming down. Look at it on the 1 month. Just straight down. Just straight down. You see this right here? This large drop. This is November 6th. So here's the 5th, day before, November 6th. So like pre and post election, you just see a sharp drop. It's obvious. All right, it's obvious. Sharp drop. And it went for a little bit more, than another sharp drop, and it came down. All right, so gold. The gold, man. So going back to right here, October 23. All right, just amazing uptrend. It's still in this trend technically, but it has sharply dropped. So I hope I hope this is just oversold, but not a long-term break in the trend. I'm not convinced inflation has gone away yet. I'm not convinced people have given up on gold quite yet. But if the trend continues, I'm going to have to adjust, and I'm going to have to, eat this loss right here. I've had a great gain, all the way through here. I'm about to eat this loss and, move my money somewhere else. But so gold is not a good week for gold. This is probably the first week, devastating week for gold. Absolutely devastating, right? But that's the market, so there's a big change, election change, not market change, like nothing really changed, like largely, like fundamentally. It's an election. So now people are shifting their market focus essentially. So bonds still coming down. Now it's still below this bearish line. This might have to be, might be able to readjust. No, I think I'm gonna keep it on this line, just because these pops right here. But I'm likely, because the last two Federal Reserve rate cuts, there's a 50 basis point cut and a 25 basis point cut. And ironically, maybe not unironically, I don't know, but when they cut the rates, the market interest rate went up. So you look at the 10-year yield as an example, it went up. So you would thought it would have gone the other way, but like it's been going up right here, as you can see. So 1 year, do it 1 month. So there's like the interest rates cuts, and it's just up, 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 up. So the rate's not coming down through the market; it's coming down through the Federal Reserve and what they're doing. But through the market, it's not coming down yet. Right, we'll see. So I might have to not give up on my bond position, but like I talked about this last week too, I might have to lower it by like 15% or to 15% from 20% and put that somewhere else. Maybe I put it in dollars. Look at this chart on dollars, just strong dollar. I have a hard time believing why, because we have the interest rates and everything, but look at the chart. Look at this fucking spike right there. Again, this is post-election. So look at right here, November 5th, November 6th. I talked about this last week. Just boom. It's obvious. It's so obvious. When it's a fucking straight up flagpole, straight vertical line like that, it's obvious. All right, this is post-election. Boom, dollar. Why? Why? It's all market speculation right now. It's too soon after the election, but like, it's right there. It's right in front of your face. So the good thing about putting money to dollars is it's lower volatility, so there won't be big swings, but I won't get as much upside. Also won't get as much downside. So I don't know if I necessarily want to put it into dollars, but at the very least, dollars are going up. It's something to look at. Commodities still going kind of flat, still in this 2-year trend. Can't deny commodities 2-year trend going back to July 22. Strong uptrend. Flat though, kind of from right around here, October 3rd, a little over a month, just kind of flat, just in this little area right here. Let me just do a little measurement tools. Oops, bitch, don't do that. I gotta reset. Click the wrong button. There we go. I just in this area, so up and down 4%, but over this like 30-day period, it's just kind of gone sideways. So commodities, not sure what exactly they're going to be doing, but in a long-term 2-year trend of this ETF, it's still been going up. So I don't think I'm going to adjust it quite yet. I don't know if I'm going to add or reduce it, but we'll see. Stocks, another good one that's obvious. You see post-election again, boom, boom, straight up. But look at this come down. Straight up and then come down. Interesting, right? It shot up through the line and then came back down. So the post-election euphoria wore off very quickly for stocks, it looks like. So maybe I won't increase my allocation here to 15%. Maybe I will do dollars then, because dollars have been holding consistently, still going up. And man, it's usually not good when the dollar's going up against everything else, the currency going up, because like that's more of like the safe haven, like the ultimate safe haven. You're just going to cash, like just straight cash, right? Just cash in hand, right? You're just going to cash. So you don't want to invest, you don't want to speculate on anything. You just want to go into cash. So people putting their money in this ETF, I don't know. I'm a little skeptical to put it into it. I think it's the safer play if I were to reduce 5% from government bonds and put that 5% into US dollars. That'd be a good play. I might do that. Maybe this week coming up. Also, we got Thanksgiving like the following week and stuff. So, holidays will get kind of slower. But I want to kind of see where it goes still. I don't want to lose too much, but I also want to see where it goes still. So I don't know what I'm going to do quite yet, but it's interesting that turnaround was very quick. So post-election, boom, spike. Week goes by, bam, drops down. All right, so the euphoria, wore off very quickly with the stock market. Still good with the dollar. And the euphoria is wearing off with gold, but dollar's going up. Then, of course, we got this fucking monster, Bitcoin. God damn, this already broke out of this trend. I did this trend last week. It's already parabolic out of that fucking trend. Look at that thing. That's crazy. That's not a trend. When it goes too vertical like that, when it's flag pulling like that, that's not a trend. Right? But it was going down, so here we are. March 2024. Down, 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 down to right here. Where are we at? October. Started going up a little bit. Kind of meeting this older trend, you know, just there. And then look what happens right here. Post-election. Shocking, right? Are we shocked yet by this? Are we shocked? That keeps showing you the same thing? Look at this spike right here. Boom. Post-election. Pop. Just pop straight up. About a week later, you get like another pop. It just keeps going, right? So Bitcoin is fucking climbing. This is volatility incarnate right here. So I always keep Bitcoin at a lower volatility. I mean, a lower allocation because of the higher volatility. Still, when it's in your portfolio and it's doing good, it's doing quite well. We saw in my look at my 3-month quarterly, 60%, 61% over 3 months. 60%. Look at it in 1 week. 19.33%, almost 20% in 1 week. Hell of a good return. And people will pretend like they predict that. No one predicts that. Bitcoin's too volatile. But you can do trends like this. You know, you can make guesses, you can estimate, but you didn't know it was going to go up 20% in 1 week. Like you didn't know, right? By having it in your portfolio as a hedge, just like having gold, bonds, you know, gold, bonds, dollars, commodities, stocks, and Bitcoin, you know, having a hedge in your portfolio, it's good to have, especially moments like this, because having it back from March to October was not good. Like it's been going down, right? It was going down for several months. It was not good having it in my portfolio, but I still kept it at 5% because like I know the long term, I've seen Bitcoin, I see what it can do. So it's going to have that, you know, the correlation to the market, but also like these volatile spikes. So this is like, in my opinion, this is pure, you know, Trump euphoria right here. People like boom, post-election again, just same thing, pop, right? It's crazy to see this, but it's very, at least up in the portfolio. It's good counterbalance to gold right now. It's been coming down hard. I don't know if I want to reduce from gold yet. It's crazy to me that, you know, it's getting to that time, you know, since October 23. Like it's been doing really great. So we'll see what happens. But as always, I'm going to update the portfolio every week. I'm going to show you little by little. You can always question, comment, criticism, anything you want. We'll see by next week if I lower my government bonds, maybe increase my US dollar. And then we'll kind of watch it from there, see what happens with gold. I'm really interested to see what happens with gold next week because there's a sharp drop. But thank you always for watching, and I will see you next week.